whereas gold is, okay, because there's a saying, in gold, it's the only asset that you can hold, essentially money that you can hold, that isn't dependent on somebody giving you something, okay? So and that's why I prefer gold. It's existed for thousands of years in all of those, so I prefer gold. I'm a global macro investor, and that means all over the world, all countries, and then I also I need to study history, how things work, and so on. And I put out a book that, if you're interested, it's called The Changing World Order: Principles for Dealing with the Changing World Order. Anyway, to oversimplify, but it's true. There are 5 big forces that operate together. First, there's the credit turns into debt, and that credit buys things. It buys goods, services, and financial assets, and that makes markets, and it makes an economy, and that is the first force. So that if you follow how the money and credit is working and so on, how it'll be the force, economic funny force. Second force is a force of internal conflict between people, and between the rich and the poor, between the left and the right, between the conservatives and we're in the middle of that, and that's how people's money and values and the conflict, and then the ideologies associated with, and how that produces internal conflict and so on. That'll also affect taxes. It will affect policies and so on. You have to understand that. We're in the middle of that right now. We're going to have new policies. What are the taxes? What's going to be? It's going to have an effect. Number 3 is the geopolitical. There's a world order. The last world order started in 1945. Traditionally, you have a war. Whoever wins sets the rules, and then you have a system, and then rising powers challenges existing power, and that system changes. And so that's number 3, the rivalry with China and such things. Okay. Number 4 is acts of nature. Droughts, floods, and pandemics have killed more people than wars, and changed more orders, toppled more orders than that. Droughts, floods, and pandemics, nature. And, we see it. Los Angeles is burning. I mean, it's something. So nature, and they're all related. Like the amount, it's going to be costly. In one way or another, the climate thing is costly. You have wars. They're costly. They have financial impacts. And number 5 throughout history is man's inventiveness, particularly of technologies, new technologies. And in my opinion, I've watched this, the printing press, the Industrial Revolution, all of these things, nothing has come close to AI, in my opinion, because it's intelligence about everything. So it's going to create a tremendous change, and they're all going to interrelate. So like the technology war related to AI is going to be connected to the military war, each country, and so on. So those are the 5 big forces. So for me to understand the 5 big forces, I need data, I need these tools and so on to understand and to deal with them. I need rules, decision rules. What if I, under these circumstances, if I did that, how and how does it work? You have a supply-demand problem. So in other words, a large deficit means you have to sell a lot of bonds. And the quantity that has to be sold relative to the quantity that's likely to be bought is a problem. And if people start to realize it's a problem, then they want to sell it. And then the problem gets worse, and it kind of feeds on itself. That can happen soon. Okay, that's a possibility. And then that changes everything, because it changes the term structure of rates. Term structure of rates affects everything. Well, I always like mine because I can bet on anything, anywhere from long or short.
It's pretty broad, yeah.
Okay, meaning I have no good excuse. Every industry since I've been around has had cycles, big cycles. I went when I graduated at Harvard Business School. There was I noticed in every time since what happened is that whatever the largest percentage increase in graduates from Harvard Business School, short the industry. Everything goes in cycles.
Yeah.
I mean, there are good times and bad times. Things become expensive. Keep in mind, it's not just a good business. Is it in markets? And is it good pricing? So technology, like the dot-com bubble, okay, technology, can do fantastic and so on, and you can get annihilated because of the pricing and the things. So you ask me my business, I can be in anything, and I can get out tomorrow. I could short it. I can be long anywhere in the world. I like that. So I like that game. I think in the superscalers and everything, that's one story. I think, just to give you my view, I think that's a very risky thing because that's a fight that nobody can afford to lose. That's even more important than profits. So when you have countries or you have the superscalers or something, and you have a competition, profits is secondary, and it's where the hype is. Okay, I think that in the applications or the transformations, the companies that are using it to radically improve themselves and so on, they are not understood. I think there's a lot of opportunity there. Yeah. There's not the hype. Yeah. First of all, I'm anti-money as we are dealing with. Debt is money. Money is debt. And what I mean by that is debt is a promise to receive money. So the only value of it will be whatever value money has. And there's too much debt. And then money is held in the form of debt. Okay, so I'm anti that. Now the question is, what's the best way to deal with that? What do you hold that's the equivalent of money? Something that you can use it anywhere, it's accepted anywhere. So money is a medium of exchange and a storehold of wealth. What is the best? Okay, now I prefer gold. However, I have some Bitcoin. A small amount of Bitcoin, and I've had a small amount of Bitcoin for a long time for the following reason, my thinking. Okay, few reasons. Privacy, the issue of privacy. You're not going to have privacy with Bitcoin, okay? Meaning the government and everybody is going to follow it. If the government doesn't like it, and they can, it's a great thing for the government. They could tax you on it. They could just take it in various ways and so on. So that doesn't have those elements. It's not held as a central bank reserve. I don't think, at least maybe it happens in the future, but I don't think it's going to be held for central bank reserves because nobody wants another government going to be able to come in there and take it or do what they want with it. So that's a problem. Whereas gold is, okay, because there's a saying, in gold, it's the only asset that you can hold, essentially money that you can hold, that isn't dependent on somebody giving you something, okay? So that's why I prefer gold. It's existed for thousands of years in all of those, so I prefer gold. And also, the behavior of Bitcoin is very difficult to make sense of a lot because it's very still heavily a speculative vehicle. And so whereas the supply demand or the if inflation rises, does gold rise? So the reliability of the cause-effect relationship is better with gold. So that's been my kind of view, but even if it wasn't my vitamin view, I'd be happy to tell you what my view is. So that's why I'm in, but it's it's a younger person's gold, and so on, and people should think I think they emphasize one versus the other too much. Okay, I'm into diversification, so I want enough of each.
Do you feel like you have enough of each?
I do.
So you're not buying any
for
more?
what? For a long while. For a long while, I've felt I've had enough of each. There's a right amount. Okay.
Can you define what a right amount is for us?
Yeah. I think that you need the right amount of some mix of those. Either is between 10 and 15% of one's portfolio. That's mathematically the right amount, and it's also a diversification. When I say mathematically, because of the correlation, when things go bad, that'll worry on your other portfolio. These things go good. Okay? And because of their relative volatilities and so on, that's it's closer to the 15% number, but somewhere in that vicinity. Be careful about more, be careful about less.